Hi everyone, I'm Paul, and in today's video I'm going to be going through how I've been using fair value gaps in trading crypto. I've been using the fair value gap quite a bit in my Bitcoin trading, and so in today's video what I thought I'd walk through was basically how I'm using fair value gaps to do trade entries, how I'm using fair value gaps to predict where price might go, how price is going to draw to particular places, and also, if you stay to the end, how I'm using the fair value gap to predict where I think the market might go in the next 1 or 2 months. So I hope you find this interesting. Like and subscribe, and let's jump in. So we'll start with the trade setup that I've been looking at in Bitcoin. Now, this is a few days old, so the trade setup's already been there, but if we go back to the replay and just go back a couple of days, you can see the fair value gap that was formed. So this is after the run-up that we had on the 1st of March. And you can see this fair value gap that was formed here. So we had a down bar followed by a big upward movement which broke market structure. You can see it broke market structure here. Broke market structure here. And then the third candle here. So this is where the fair value gap was formed. And interestingly, if you've been following the markets, every time Bitcoin sort of goes up into this sort of 45 range, it tends to pull back. And so the market's rallied up into this 45,000 level, which it's been trying to get through for quite some time. And you can imagine what's actually happening here is you've got lots of traders who are using this zone to go short, and they're obviously setting their stops at this level. So if you're going short, your stop's obviously going to be a buy order at market generally to protect that position. So there's a whole bunch of liquidity all sitting here, ready for someone who wants to take a sizable position. You can trigger those stops, create a whole bunch of liquidity for a move down to the downside. So we can see that that's pretty much what happens. The next candle penetrates up into this zone, which would have triggered a whole bunch of those stops, allowing someone to get set, and then the market starts to fill this fair value gap. So we can see that it's done that in quite a powerful down move. Now, in terms of getting set myself, just knowing that the market's sort of overreacting quite a bit at the moment, I didn't jump in. You could have jumped in right from up at the top of this fair value gap here, but knowing that the market's a bit weak, I was expecting it to trade into the bottom of the range, so I got in down here. And you can see, even given that, whilst it did hold up a little bit, it's fallen through. Now, the stop would be down here at the bottom, at the low, I should say, of this candle. So overall, the market's in a difficult place to trade at the moment. It's been very choppy, but I'd feel more confident trading down around this level just because we've been in this range for a while, and we've obviously got this low that was set here. So this isn't something you'd put a lot of money behind, but there's a pretty decent trade here, and there's a setup obviously in here as well. If you follow an order block methodology, there's an order block sitting here. So there's a lot of confluence in terms of taking a long position here and making an aim for a shot back up here to this $45,000 level again. So in terms of how that trade's playing out at the moment, the market's pulled up a little bit. It did overshoot. It didn't quite hit the stop, so still in that trade. And, hopefully the market rallies up and we can, pull off a nice trade in that zone. So that's the setup that I'm currently running in Bitcoin at the moment. And still in it, even though it was a little bit hit and miss there for a moment. So the other thing that I think is interesting about fair value gaps is how you can use them to predict where price might go. So if we just clean this chart up and go back a few candles, you can actually use fair value gaps once you sort of know that they're there to help anticipate where price is going to draw to, like a paper clip to a magnet is how ICT teaches it. So if we go back, a couple of candles, you remember we had this big spike low, and there's actually a fair value gap right here. So there's a fair value gap that's formed here on the downside. So a fair value gap in this scenario is like an imbalance. And so it's where there hasn't really been proper price discovery. You don't have any overlap in terms of the bars. So this particular sell bar is just like shot straight through. There's been no overlaps of the wicks on either side, and that's what creates this imbalance or fair value gap. Now, I've only been doing work with fair value gaps recently, and the sort of loose trend I'm starting to see is that, you'd call this a bearish fair value gap. Now, when the market has bullish price action, the bearish fair value gaps or imbalances tend to get filled, and the opposite would be true as well. So if you had bullish fair value gaps or imbalances and the price action was bearish, then you'd anticipate that those fair value gaps would get filled. And so if we play this forward, this is obviously all been done in hindsight, but I think it's a useful exercise to do, just to see how price sometimes works. So you can see how price will draw back into the fair value gap as we move forward. So you can see, we go up and down a little bit and then bang straight through and fill that fair value gap. Now the interesting thing, and we just saw it with the trade setup, is that there's been another fair value gap formed here as well. So we've just moved from, this price action in terms of going from, the low of the range into the higher part of the range, as we talked about before. So we've had another fair value gap form in the process of going back to the top of the range. And so you'd now think that price action is going to be more bearish because we're at the top of the range, we've been range bound, and so you ideally want to be trading at the upper and lower thresholds of the range. And so this is where people would be looking to go short, and as we went through before, indeed they do. We start to run into this liquidity up here where all these stops would be residing, and then the market sells off. So I think that's interesting that we see these fair value gaps act, or imbalances act as draws to where price will go, depending on if the price action is bullish or bearish. And so where I think fair value gaps or imbalances can be helpful, and I've only really just noticed this in the last couple of days of doing some testing and some analysis, is that when you move up into a higher time frame, because you can use fair value gaps on any time frames, and in terms of the trading I've been using them for mostly at the moment is for refining entries on the daily chart, is if we go out to the monthly, now there's obviously people have different views on what the market looks like, but if you just apply some simple measures like moving averages, so these are EMAs, you can see that on the monthly chart it's still pretty much a bullish chart. We have a high here, low, and a higher high, and then a higher low. So it's still all bullish in terms of the price action. Just the most recent price action's been pretty painful, and we're in this sort of chop zone here at the moment. And so it's understandable when we look at both weekly and even daily that it's not really quite as strong as that monthly chart, and we're obviously at a pivot point where it could kind of still go either way. I think the market is turning on both the weekly and the monthly, the weekly and the daily. But if we look at the monthly in terms of where price might be drawing to on this higher time frame, and remember your higher time frame is always going to be the one that's going to have the overriding trend, is that there's a fair value gap here that was formed in that big pullback we had from December last year. So the thing that's going to be interesting to see, and it's obviously difficult to predict the timing on this kind of time frame, but where we are at the moment, will we come up and fill this fair value gap? So we're sort of forming a little bit of potentially a bottom here. We know that the market's had a lot of trouble getting through this 45,000 zone for quite some time, and we've been trading in this sort of range, between 38,000 all the way up to sort of 45,000 for quite some time. And so the interesting thing will be is, will this imbalance be filled in the next few months? And so if we go back and, we can go back and do a replay again, we can see that previously when the market pulled back in the middle of last year, sort of in that sort of April-May period, there was a fair value gap formed here. And so this is very similar, to what I'm talking about in terms of what might happen going forward, is that in that period, we had this big pullback, fair value gap was formed here, and if we roll forward, And if we roll forward, this is going a little bit slower than what I'd hoped, but you can see we still pull back a little bit. We come into this sort of June, July period. And then slowly but surely, that imbalance is filled. So that's not necessarily guaranteeing that that's what we'll see in 2022, but we've seen this happen in the past and in those past examples. So at this level, I think there's quite a lot of support that's being built at this base here, and so tentatively we can start to think that maybe a bottom's going to be formed, and so potentially we're going to have bullish price action, which, going back to my thesis at the beginning, would be that these bearish imbalances, these bearish fair value gaps will eventually get filled. So this is still a bit of an experiment. Lots of the testing I've done at the moment seems to show that this happens. It's just very difficult to predict the timing of it. So that's obviously quite we've been trading in quite a big range. There's quite a lot of potential, but maybe that sort of 52,000 mark will be broached, and this is really going to be, I think, a big thing for the market, because getting past this initial resistance here at 45,000, if we trade up into this fair value gap, quite similar to what happened in the previous pullback, once that fair value gap was filled, the market pushed upwards, and I'd expect that if we do manage to get into this zone here, we will trade up higher and potentially start to create a higher high. So that'd be great if that happened, and keep an eye on it and see what happens. So there's my video on fair value gaps or imbalances and how to use them for trade entries, and also how to predict where price might go or price might draw to. I've started using it in my trading a little bit, and I've been doing quite a bit of testing and back testing on fair value gaps and imbalances, and I think it's a really handy tool. So I hope you enjoyed that today, and if you did, it'd be great if you could like this video. That'll help other people to find it. And if you'd like to continue learning more about fair value gaps and imbalances and some of the other teachings that ICT has been sharing with his YouTube video, please subscribe to my channel, because I'll be sharing basically everything that I learn and all my findings as I work through his mentorship program and the implementation of that into some of my training. And I'll see you in the next video.